Alright, so let's just do a quick mic check, and I'm waiting for a few more people to join the stream, and then we will start. But yeah, correct. So today I'm just doing a quick Q&A. No trades are going to get placed, and I'm going to explain to you guys with a quick breakdown trade of one of the trades we took last week. I didn't actually break it down on the YouTube channel on the weekend because I post the podcast instead. Just waiting for a few more people to get inside of the live streams, and we will start. I'll start off by breaking down one of the trades we took last week, and then we'll finish off with a quick Q&A, because obviously on a day like today, I don't want people thinking that they should be trading or trying to force any trades, because it is not going to work out in your favor. Low probability price action is something you want to sit out of. Use today as a day when you're basically back testing and expanding your knowledge. And also, we've got the mic back now, so we're not using the mic off the laptop. I managed to get my suitcase shipped from Miami, so they managed to get that all sorted. Just in the chat, just drop quickly and let me know how the mic is doing before we start this stream. Alright, I already expect this stream to be a little quieter than usual because I am streaming a bit later on inside of the New York session, so due to different time zones, a few people are already gonna be pretty switched off and not actually paying attention to anything happening today anyway, because I've already called the day off. So let's get straight into it. We only got around 40 people in the stream, but we will commence anyway. So one of the trades we took last week, this was on Wednesday the 2nd of October, and this is the reason for why I took this trade. So on TradingView, it only allows me to replay, so I'm using the replay mode here on TradingView, basically explaining the trade we took last week on Wednesday. So approaching price prior to the New York Open, you can see that we have these relatively equal lows. And if you actually go back more, say 10 minutes, I already marked out these equal lows and looked for these equal lows as a major drawn liquidity to then get swept. So I marked out these equal lows, I marked out this major low, I marked out this high, and also this short-term high at this level here as well. So also taking a look inside of the London session as well, you can see that we have these relatively equal highs, which are actually relatively equal London highs, and they've already been taken out prior to the New York Open. So that's something we noted as well going into Wednesday's AM session. And then dropping down to the lower time frame, waiting for the macro, we was waiting to see how price reacted at the open and seen where price was actually drawing to. So I'm just going to mark out these levels quickly. And of course, usually we'd monitor both NQ and ES, so we'd split the screen into two. But for this example, I'm going to show you NQ because it doesn't actually let me replay both NQ and ES at the same time, which is a bit of a shame. But I can show you NQ and our thought process behind whilst monitoring NQ. So you can see that we have these short-term relatively equal lows just outside of the London session. So they're basically relatively equal lows, London lows here as well. So we look to see either price retrace back to a premium, take out either this level or preferably this level to look for shorts to then target these relative equal London lows. If not, no problem. Then we look for these relative equal lows to get taken out, and then we can look for longs to then target the opposing liquidity. Hopefully the mic is not too bad. Is it low probability? Why don't you trade after FOMC? So tomorrow is Thursday, right? And then we have Friday's trading session as well. So we will be monitoring price in both Thursday and Friday. I don't see why not. Both of the days of Thursday and Friday, a majority of the news has already been out of the way. So both of the days are way more high probability than today, because trading prior to FOMC, the price action, I don't know if you guys seen it this morning, but due to past experience, you do not trade before red folder news, especially FOMC. And today was one of them days which you want to sit out of. More trades is not more money, and the price action is extremely low probability. Maybe some of you monitored price during the AM session this morning, but you can clearly see it was very choppy, unpredictable, and highly manipulated. So let's see. Let's mark out the macro times of 9:45, 11:15. And now let's monitor price prior to the macro to see whether we get that sweep of sell side, and then the original sweep of sell side of sell stops then get taken out. Okay, so there you go. You can see price has come down. It's taken out sell side, these relatively equal lows prior to the macro of 9:45, 10:15. And then the original sweep, so the first sweep of sell side, you can see here, we'd mark this out in real time, which we did, and we actually caught this trade live. Everyone caught this trade. I just didn't have time to actually break it down on YouTube, so I just posted the podcast instead. And then that short-term low, you can mark this out as short-term low, or you can mark it out as uni. And then that short-term low has been taken out on NQ. Whether it's been taken out on ES or NQ, we look for that short-term low, the original sweep of sell side, to get taken out on either NQ or ES. So if ES takes out and NQ doesn't, then that can work as an SMT and also a confluence for us to then still look for longs. So that validates NQ if ES has already taken that short-term low and NQ hasn't, or if they both take it, it's not a problem. Either way, vice versa, it's still high probability. And then this short-term high here is the point where we'd look for a displacement above this short-term high. And also, as I mentioned, you can see that just because we've had a sweep of sell side, we also like to look on the higher time frame to see if we're actually filling any higher time frame imbalances, which you can see here. We have this 15-minute bullish. It's come below these relative equal lows. One sec, let me just grab some water quickly. Yeah, more trades is not more money. A lot of people, they think, okay, I'm going to trade this macro, this macro, this macro because I'm desperate. I need to get payout. I need to get funded. I need to prove to people this and that. And more trades is not more money. The more trades you actually take inside of each trading day, you're exposing yourself to more risk because you're clearly not taking high probability setups. And it is literally just a matter of time until you lose your account. Right. So getting back into this breakdown. So when price actually draws to a level of interest, such as buy side or sell side, or London highs, London lows, just because you have a point of sell side liquidity, to make it more high probability, you actually want to have a higher time frame imbalance resting below it, which price would look to fill, sweep sell side, fill the imbalance, and then take out the short term low. And NQ and ES is both correlated, so they're both moving like at the same time. They're not just, you don't see ES taking buy side and NQ taking sell side. That's not what you want to see. You want to see correlation between the two pairs. And considering they're both correlated, the only difference you can see within correlation is that NQ would take that short-term low and ES wouldn't, which is actually higher probability. And now at this current point, we look to see a displacement above this short-term high, considering we're inside of that first AM macro now as well. So you can see here that price is actually now displaced higher. The candle's actually closed above that short-term high. We've swept the short-term low. Relatively equal lows have been taken out, relative equal on the lows. We've got a clean drawn liquidity for these highs here at 0.11. So we're going to mark out this 1 minute bullish gap. You can see we have this breaker block here as well. And we'd actually look for price to draw down. And as soon as we get a tap of this 1 minute bullish, we're only going to run a 25-point stop and then target the highs. For people who are new joining the stream, this is actually on replay, so make sure that you're not actually executing. If I do say we've entered long, this is on replay, so please do not enter long on thinking I'm calling a trade here. This is on replay, and it's a trade we took last week. So at this current point in time, this is the trade we took last week. We anticipated for price to actually draw back down into this 1 minute bullish gap, and we would enter off a tap on this 1 minute bullish. We ran a 25-point stop. We actually had a full position size, or maybe half, and we targeted the opposing liquidity for 107 points. And then the short-term high, which it makes. So let's just see if we get an entry first, and then I'll explain where we actually put our TPs and the reason behind why we had our TPs at them levels. Okay, so price drawn back down into that 1 minute bullish. That actually triggered us long. 25-point stop. Our first TP was at the short-term high for about 26 points at this level here. Our second TP was at this other short-term minor buy-side liquidity, and our final TP was at the opposing liquidity there for 107 points. We did actually secure 108.25 points because we actually caught an entry just below a tap on that 1 minute bullish gap. And then obviously running a 25-point stop, you don't really want to run a stop greater than 25 points. If you do, then the trade is not really the right trade to be taking, and you're best off sitting out. The greatest stop I actually would personally run, without considering halving my position size, would be 30 points. At 30 points, anything above a 30-point stop, you're going to have to consider halving your position size if you're going to use a 35 handle stop. But it's extremely rare cases that we do use a stop greater than 30 points. It's usually always at 25 handles, because if it isn't, then it's most likely the wrong trade to be taking. So let's see how this trade played out. Okay, there you go. So first TP was hit at this point. We moved our stops to break even. We closed out, or I closed out 2 contracts, depending on your position size. I trade 4 full NQ contracts across 10 300k accounts, and then closed out 2 contracts at this point. Stops at break even, and now let's see whether we get second TP or not. So as I said, because our entry was actually a few ticks below, it didn't actually come down and stop us out at break even. So we were still in the trade at this point. Our entry was literally a few points below at 0.325. So price literally came down almost to break even. It would have stopped a few people out at break even, but we was still inside of the trade, and I said move stops to break even at that level as well. It didn't take us out at break even, and I was still in the trade at this point. And there you go. So second TP was hit, took off 1 more contract because we do not have another short-term low. So let me explain this quickly as well. So after second TP has been hit, you look to trail your stops to a valid point. If price was to retrace back, create a short-term low, continue higher, you wouldn't actually trail your stops to that previous short-term low. You look to trail your stops at least 2 short-term lows behind, because after second TP, price will usually, majority of the time, look to sweep liquidity of a previous short-term low, considering you're in longs, So price will look to sweep a previous short-term low where people trail their stops, and then once it takes that short-term low, majority of the time it will continue to final after it's taken them stops out. So you look to trail your stops 2 short-term lows behind. So it creates a short-term low, you would still leave it at break even. Once price comes up here, creates another short-term low, then you trail your stops to 2 short-term lows behind. And then if price, which majority of the time it does, take out that short-term low, and you get a continuation to final TP, you still get final TP because you didn't trail your stops too hard. So at this point, stops at break even. Now let's see whether we get final TP or not. So as you can see, our stops currently 2 short-term lows behind. Okay, there you go. So we're currently three short-term lows behind. So at this point, we trailed our stops to this short-term low, which is 2 short-term lows behind the previous. So our stop has been trailed to this level here in a profit. And there you go. Price went for final TP and we secured 108 handles. Very simple textbook trade, sharp displacement, clean sweep of sell side at the open. As soon as price opened as well, it's good to note, is that as soon as price opened at 9:30, we've seen price retrace all the way down. So this is a clean example of a Judas swing. Goes for them relative equal London lows. The original sweep got taken out, sharp displacement inside of the macro, and then we got a clean entry, a valid stop of 25 points. First TP at that short-term high, second TP at minor buy side, final TP at the opposing liquidity, and there you go, price delivered. So this live stream today is, we're not taking any live trades today. I'm literally just breaking down a trade so you guys are getting some educational content in. You guys are learning and always expanding your knowledge. And now, of course, let's go to the Q&A. So any questions which you guys have. Also, I always find that I get a lot of prop firm questions. How much should I risk? How many contracts should I risk? So the one thing which I'm doing, which I think will benefit a lot of you guys inside of the group, is that, oh yeah, good idea. One sec. Let me just remove the ads off this stream before I start rambling on even more. Okay, so I've just removed the ads off. One sec. Okay, so one thing I'm doing for you guys as well is that, I'm not sure if you're aware, but there's one channel which the majority of you should be in, but yeah, don't worry, I've removed the ads, they're gone. So another channel inside of the group is called ICT Bible, and it hasn't been updated for a couple of weeks, so it's probably dropped down through your list, but the majority of you should be inside. If you're not, just drop me a text on Telegram, I'll send you the link, I'll get you inside. What I'm going to do is do a full risk management plan for every single prop firm, well, the prop firms which you should be using, such as FTMO, Apex and Top Step, the 3 prop firms which I personally use. And then what I'm going to do is do a risk management plan for each account size with each prop firm, so that people don't ask the same questions of how many contracts should I use on this account, should I half my position size, so on and so forth. How many contracts should I use on a 300k Apex or 150? I'll just do a full risk management plan with every account size on each prop firm. Say you was to pick Apex, any account size, you go to the ICT Bible, you'd say, okay, this is the correct risk management. I need to use this many contracts or this many micros, and then you follow that. You don't revenge trade, you stick to your rules, you're going to get paid out. It's going to take you, realistically, when you start a prop firm challenge, it's going to take you realistically around 3 to 4 weeks to pass the account, and then to get a payout, it's going to take you another 3 to 4 weeks to secure a payout. So the absolute max, following your rules, not going outside of your rules, not trading outside of macro, not taking a trade and then trying to make it back, for 2 months, realistically, you'll be getting paid. you'll be getting a payout, you'll be building your capital. After that original payout, say you got a 500k capital, then let's start working up. Let's build that up to $1 million. Let's build that up to 2 million. And it's very easy, and it won't take you long. It shouldn't take you longer than 4 to 6 months to build yourself up to a significant amount of capital where you're making a serious amount of money. But you can't expect to get to that level and that point if you're still emotional, you're still taking trades which you shouldn't be taking, and trading outside of basically your rules. Do you treat your live account like prop firms when it comes to position size using the same risk size? That is a very good question, considering with the live account I do not have any limits of drawdown. So personally, I trade with a similar risk management with my live account, but I rarely trade the live account too much. I only trade it on very high probability days, and I mainly stick to trading the live account only when, say, Apex or Top Step is untradeable because I'm waiting for a payout. Then I'll either use the FTMO or the live account, and I'll trade that in the meantime whilst I'm waiting for my Apex or Top Step to actually pay out. Once they've paid out, then I'll go back to continue trading them two prop firm accounts. I wouldn't say the payouts on Apex are fast. I'd say they've been apparently sped up. I haven't yet submitted a payout inside of this faster Apex scheme, which they're saying they pay out faster. So I will see within a week or two once I'm ready to submit another payout with Apex. But we'll see how fast, and I'll let you guys know how fast I actually receive that payout. But usually, with my experience with submitting multiple payouts with Apex, I'd say it usually takes around 2 weeks, a week to 2 weeks to actually receive the payout. They did previously have a very long payout scheme and period. The best prop firm which pays out the fastest is Top Step. I submit the payout. By the next day, I've received an email. Well, instantly, I receive an email saying they're processing it. They say it takes up to 10 working days. Within the next day, it's in the Wise account and it's done. Payout's done. Apex can take up to a week or two. That's why I do have live account and then FTMO account, which sometimes I actually make a significant amount of profit on the other accounts because I'm waiting so long for the Apex to actually pay out. And it can be quite annoying, and there's two ways to go about this. You can have 20 Apex accounts and you could trade 10 accounts, because if you don't want to go over live or an FTMO account and you just want to stick to Top Step and Apex, this is the game plan and the way to do it. So you're trading Top Step, they pay out the next day, so you're never going to have to worry about waiting for Top Step to pay out. When you're waiting for Apex to pay out, what you can do is trade. So you have 20 accounts, you only trade 10. Once you're waiting for a payout with them 10, you trade the other 10. And that's also very good because if you're a bit concerned or new to trading with prop firms and you think you're at risk of losing the accounts, which I entirely understand, this is one good way to do it. So get funded on 20 accounts, use, say, a higher risk to get funded faster, because you don't want to be on the evaluation phase for too long. Let's make some real money. Then once you pass and you have 20 funded Apex accounts, or even 10, let's say you have 10, you can trade 5 at one time. Then once you're waiting for a payout, then you trade the other 5, you build the other 5 up, you wait for a payout, and then you trade the other 5. And let's just say, because you're new, maybe you are going to take some dumb trades, you may be going to accidentally one day, you might lose your mind, who knows? I've never done that. I mean, I'm not going to say I haven't done that. Of course, I've blown multiple funded accounts, especially as I mentioned inside of the podcast, especially after that first payout I initially received whilst I was working around 2.5 years ago, or just over that. there was a 4-month period when I was blowing accounts consistently all of the time, because due to emotions, revenge trading, and of course it's one thing that everyone goes through. But as I said, if you feel like you may go down that rabbit hole or loophole of actually losing your accounts, then I do recommend getting funded on an even number of Apex accounts or an even number of Top Step accounts. What I mean by that, say 4 Top Step accounts, trade 2 of the Top Step accounts, continue trading them 2 accounts, prove to yourself that you can actually manage your risk well, get paid out multiple times, not just once, not just twice. Let's see multiple payouts on them 2 accounts, and then once you've proven to yourself, then you can trade using all 4 of the accounts, or get up to 5 and then continue trading all 5 of the Top Step accounts. And that is the best way to move forward with trading prop firms, especially if you're new. Yeah, that's a good question. Why don't I have 20 300k accounts instead of 10? So I currently run 10 300k Apex accounts, and I will be looking to get up to 20 accounts. I just haven't really got around to it. I haven't really been too in touch with Apex that much since there was an issue in April. So that is mainly the reason I haven't really been with Apex, and I haven't really trusted them that much. I've seen people even after April who I know who actually trade with Apex still have issues, and they've been submitting big payouts as well, and they still have issues personally themselves. That is mainly the reason I haven't really bothered with actually scaling up with Apex. But I can't lie, since that issue in April, I've not had any other problems with Apex paying me out. They've paid me out multiple times since that issue, so I don't believe it will happen again. So I do look to actually get my accounts up to 20 300k accounts instead of 10. But mainly since that issue, I haven't really bothered or gone out my way to actually increasing capital to 20 300k accounts. But as of now, I'm just running 5 150k accounts, 10 300s, 1 400 with FTMO, and then my live account as well, which I rarely trade, but as I said, I trade it here and there depending on payouts. Can you explain how to define discount and premium in time frames? So you can have a discount and a premium in any time frame, but of course the higher time frame always weighs over the lower time frame. So starting on the 4 hour, let's actually drop down to a live chart. Let's get rid of this example quickly. Okay, so it's very clear on the 4 hour time frame, you can say that we're in a premium. What I mean by this is that price has kept pushing higher without a significant retracement. So you can see from this low here, you can see that price has not had a significant retracement to a 62% retracement. Even from here, price is not retraced to a 62% retracement. So on the higher time frame, 62% retracement on the fib is at this point here. So obviously we'd look for price to draw down to a 62% retracement, fill these bullish imbalances on the higher time frame, which I believe on the daily, that will be a daily bullish as well. So you can see here on the higher time frame, before we see an actual continuation higher, I would like to see price obviously retrace down and fill these daily bullish gaps, at least sweep sell side at the 50% level, and possibly tap into that daily bullish gap and then see a continuation higher. So as of now, price is in a premium, and I would say the drawn liquidity before we actually see a retracement would be this level here, as we have a daily bearish gap resting above this level of buy side here. So this is a major drawn liquidity. Also the same thing with all-time highs. So all-time highs at 21,243, But this right now is a major drawn liquidity at 545, considering we have a daily bearish gap which has not been fully filled at this point in time. So price is going to look to at least fill this daily bearish gap, sweep 545 before we see price actually retrace and fill these bullish gaps, because at some point price will, but as of now the drawn liquidity is still going to be higher. So you can happily say that we're going to want to see a continuation of price to go for 545 before we actually see lower prices. I'm not saying it's going to do it today, I'm not saying it's going to do it this week, but I would say that price is looking to draw to this level, and you can see here price is in a premium. Let me show you an example of when price was in a discount. So here's a clean example here as well. So you can see we had this run up. We had this run up here. So we had this run up here for price, and then from the low to the high, you can see that price actually retraced back to a 62% retracement. So price was in a discount. We had these levels of sell side liquidity. Price actually came down, swept sell side, filled these 15-minute bullish imbalances just below sell side. It tapped into it, not by too much, and then we've seen price actually continue higher, reach for the opposing liquidity, which was that high, and then price has come back to a premium, and then obviously we look for price to then take out this level here, as we do have that daily bearish gap resting above. So it's very simple. We just use it as a confluence, whether price is in a premium or a discount. It validates us, because you don't want to take longs inside of a premium, and you don't want to take shorts inside of a discount. And the same applies all the way down to the 1 minute time frame as well. So you can see that we're currently in a premium massively. We look for from this low to this high. We look for price to retrace. This would be around a 62% or just over of this minus sell side liquidity to get swept before we see a continuation higher to target the opposing liquidity. So that's basically a brief overview of premium and discount. I hope that answered your question. Can you give us a short time frame work of how you would determine your bias today? So you want to see an example of the New York AM session this morning, which at this point in time, this is not a day that I would have traded at all, either way. But let's just say we was to approach price this morning. I don't really like to do this because I'm basically giving you hindsight, and a lot of people can get annoyed because you're like, oh, it's hindsight. You can see what's already happened. So I don't really like to, I'd rather just call it live and call a bias live because it's not already happened. But obviously approaching the New York AM session, I'd mark out this low, this high, this low, and this low as well. I'd also mark out other major draws on liquidity, such as these highs as well. So it appears we have some relative equal highs, which I would have monitored at 330.50, which I don't believe 330.50. Yeah, it was taken out after the, so we had relative equal highs going into the session this morning, which was a major draw on liquidity for price to look to draw and fill. And also on that daily time frame, you can see that price is still not finished, and it's going to draw to 540 and actually fill that daily bearish gap to the left. So I probably would have gone into the AM session this morning with a bullish bias, considering that we have that daily bearish, that major buy side liquidity, also then relative equal highs at around 330 as well. But as I already said, I don't like to basically talk about things after they've already happened unless we actually took it live. Like I just broke down the trade from last week on Wednesday, which we actually all caught live. Everyone made money, so I don't mind breaking down that trade, but I don't like explaining stuff which I didn't actually trade, or talking hindsight, because I don't want to look like, you know what I'm going at. Can you make this video available to watch again? Yeah, of course. I'll make it public. You guys can rewatch this if you found it beneficial. If anyone's got any more questions, drop them inside of the live stream chat. If you group 5 top step accounts on Tradeovate and trade using TradingView, will it still? No. So if you want to group all your Apex accounts together, you actually have to buy a software. It's sold by Apex themselves. It's around $200-300, and it's with NinjaTrader. You are able to group all of your Apex accounts together. Whether you're able to group Apex and Top Step together at the same time using that software, I don't believe so, but I will look into it. I don't personally use the software, but if you want to execute through TradingView, where you're clicking this button and you're executing, and it executes on all of your Apex accounts, then you actually have to buy the software. I don't personally do that, but I split my laptop into 2 and execute on both sides with Tradeovate tabs open on both sides of the screen, and then I have Apex and Top Step grouped together on the website. But regarding having a lead account through TradingView, it's not possible without that Apex software. So that's the answer to your question. With textbook setups, why would you say the first AM macro has the highest probability? Very good question. So due to past experience, I would say the New York AM session, so the first AM macro, is highest probability, because you have the New York Open is where the greatest amount of volume usually occurs. So the most amount of liquidity inside of the market usually occurs at the New York Open. And then going into the macro, usually some level of major buy side or sell side liquidity has been manipulated due to the New York Open. So you get some sort of Judas swing or price withdrawal to buy side or sell side liquidity at that specific time and day. You can clearly see at the New York Open, that is usually where the move will start. So you'd have the New York Open, you'd have some sort of Judas swing like this, where it takes out some sort of sell side liquidity. You can see here, and then as we approach the macro of 9:45, 10:15, then the move happens and it's off. It's very, very simple. So that's where I usually find the most amount of liquidity in price is at that first AM macro. And not all of the time, the first AM macro is not always going to produce the greatest amount of liquidity or the greatest moves in price. Sometimes you can have a very choppy first day of macro, and the second day of macro could be crazy and you catch a lovely trade. But let's just say there was no trades inside of the both first day of macros, but you did have high impact news on that trading day. So it's a Tuesday with high impact news, and the news has already come out at say 10 a.m. You haven't actually taken any trades inside of the first 2 a.m. macros. However, you're going to wait for the PM in that instance, considering it's a Tuesday, you've had high impact news, so the PM session is going to be high probability. You'd approach the PM macro with the same approach as the AM. You would mark out lunch highs, lunch lows, major drawn liquidity on the 15 to 1 hour time frame. Look where price is looking to draw to. And not every AM macro you're going to have high probability trade setups. And I'm not saying every single AM macro you're going to take a trade, but due to past experience, that first AM macro always has the highest amount of liquidity and volatility and the cleanest amount of price action. I don't personally trade the London session. I think there's not a lot of volatility inside of the London session. You can get some very clean trades, and I have seen price move rarely around 130 handles. I have seen it inside of the London session. It just occurs a lot less than, say, the New York AM session. So that's the reason why I don't trade the London session personally. Yeah, I fully agree with that actually. A lot of trading live streams, they get all excited and loud, they start screaming, they make 10k, they're jumping out of their chair. I make 50k and that's it. I just close the stream. I've done it so many times. I don't understand why other people. I feel like there's a lot of fake traders. There's a lot of bad influencers out there who basically claim who they're not, and you can clearly see it when you're watching their live streams. I've personally watched many live streams in the past. Of course, I've watched many influencers in the past before as well, and you watch their live streams, you can see how emotional they are. They take a loss, their emotions, they literally look like that they're going to kill themselves, you know? And then they take a win, they're spinning around in their chair, they're dancing, they're screaming. Like, I take a win, you know how I approach price. You take a win, okay, all right, let's do this, let's do this, let's do this. Let's trail stops to this level. Everything is a thought process. If your emotions are all over the place, and you're spinning around in your chair after making $500, or whether you made 50k or $500, it doesn't matter. I'm not fixated on the dollar amount. I really couldn't care less. I'm thinking logically and based only on logic. I'm thinking, what is the next best decision for me to make? Not spinning around in my chair. You know what I mean? You got to stay calm and collected, otherwise you're not going to be a profitable trader, and soon enough, if you don't manage your emotions, the emotions will take over, and the emotions will take a trade for you, and that's when you blow your account. So you just have to stay calm and collected. You take a loss, you're in the same mood. You take a W, you're in the same mood. And that's how you should trade, and that's how you should always trade. And also, when I am live streaming, of course, when I approach price tomorrow and going forward, I always tell you guys what I'm looking for. So you guys already see it coming. I'm like, okay, London lows has been swept. We've had this, and that. I'm going to be looking for, say, longs. I'm looking to enter long off this 1 minute bullish. You guys already know it's coming. You already know that I'm about to enter the trade. So the majority of you would already be ready to take the trade. I'm not just going to send in some random signal into the chat. You guys already see it on the live stream. You see me communicating with you guys in real time of what's actually happening. That's the good thing about it. So you guys are updated live in real time, and you completely understand what I'm about to take as well. Is this going to be on YouTube later? Yeah, of course, 100%. I'll make this public so you guys can actually rewatch this if you actually found this beneficial. If you did, then I will do a few more of these in the future as well, because I think answering Q&A and questions like this can benefit a lot of people. If you found this live stream beneficial, just drop a like on this live stream as well, so a lot more people can actually see this channel. Yeah, that's a thank you for taking your time out of the day to teach us. No problem, brother. My only advice to you is to actually just take it a lot slower and expect that it's going to take a little bit longer. It's not going to take you a week. It's not going to take you 2 weeks to get paid. It's going to take you, and expect it's going to take you a little bit longer than you may originally expect to actually get funded and get a payout. But if you stick to your rules and understand that more trades is not more money, and take the trades because when you take a trade, you know when it's the right trade instantly. You're like, okay, this is a very high probability trade. There's a very high probability chance that this trade's going to work out. 80% this trade will work out. When you take a low probability trade, as soon as you enter, you instantly know. You're like, this is 50-50. I'm either going to probably get first TP and then taken out straight away, or I'm just going to go straight to stop loss. And that's why we don't trade on days like today. Because that today is one of them days prior to FOMC. The price action is highly manipulated, and it's hard to predict. So that's why we don't trade prior to FOMC or red folder news. And I'd much rather sit out a day like today, because I know there's in the future or even next week there's some very high probability trading days coming up. So I'd much rather sit out of a day like today and approach price tomorrow. Okay, so I'm gonna wrap up this stream. For people who are new, I am gonna do I'm basically working on it at the moment, a full risk management plan of all the prop firm accounts and sizes of how many contracts or micros you should be using. So people don't have to ask that question of how many contracts should I use on this specific Apex account or Top Step or FTMO. So I'm going to get that all written up. It will be inside of the ICT Bible, the group on Telegram. If you guys are not actually inside, so just drop me a message at MT118. That is the only account which will ever reach out to you on Telegram. I'll never message you first. There's a few people at the moment trying to impersonate me, so make sure you do not send anyone any money. I'll never ask for or even message you first, so just be aware of that. But if you do drop me a message, it's MT118 on Telegram if you want to get into the ICT Bible chat if you're not already inside. And on that note, I will see you guys inside of the live AM session tomorrow. Have a great rest of your day.